Alright, I need you to stop what you're doing for a moment. Stop scrolling, put down your coffee, and give me your undivided attention. Because what I'm about to share could fundamentally change your financial future as a business owner. This isn't just another piece of advice, it's a critical alert for every single LLC owner in America. Here's a hard truth. If you're running an LLC, there's a very high probability you are giving the government far more of your money than you legally have to. It's a silent profit killer that affects millions of entrepreneurs. Why? Because the default settings for an LLC are not designed for tax optimization. Many owners treat their business like a hobby when it comes to finances, mixing personal and business expenses, or they simply aren't aware of the specific tax elections available to them. They're so focused on generating revenue, which is great, that they neglect the equally important task of protecting that revenue from unnecessary taxation. We're not talking about a few $100s here and there. We're talking about thousands, potentially tens of thousands of your hard-earned dollars every single year being needlessly siphoned off and flowing directly into the coffers of the IRS. Think about what that money could do for you. That's a new piece of equipment that increases your efficiency, a marketing campaign that could double your customer base, a down payment on a house, or a significant boost to your retirement savings. Instead, it's gone, simply due to a lack of knowledge. Now, most people view the tax code as a dense, intimidating book of rules designed to take their money. That's the wrong perspective. You need to start seeing the U.S. tax code for what it truly is. A series of incentives created by the government to encourage specific economic behaviors. The government you to invest in your business, hire employees, save for retirement, and purchase equipment. And to encourage this, they've embedded a roadmap of deductions, credits, and legal loopholes directly into the tax law. It's not about cheating the system, it's about understanding the system and using the rules as they were written to your advantage. The game is already being played. The question is, are you a passive participant or an active strategic player? Let's make this crystal clear. Every single time you miss a legitimate business deduction, whether it's a portion of your home office, a client lunch, or a software subscription, you're not just losing that dollar, you're losing the tax on that dollar. If you're in a combined federal and state tax bracket of, say, 30%, failing to deduct a $100 expense means you've just voluntarily handed $30 over to the government. Now multiply that by hundreds of missed deductions over the course of a year. The numbers become staggering. It's a direct transfer of wealth from your pocket to the government's, and it's entirely preventable. The year 2025 is particularly critical because it's the last year before major provisions of the Tax Cuts and Jobs Act expire. This is your last chance to take full advantage of these rules before they potentially disappear. You can't afford to wait and see what happens. You need to act now. The home office deduction is not an audit flag. That's old school thinking from a bygone era. Once you establish that space, you calculate its percentage of your home's total square footage. You can deduct 10% of your utility bills, mortgage interest, insurance, and even repairs. Your vehicle is one of the most underutilized tax deductions for small business owners. With the actual expense method, you track all real costs and deduct the business use percentage. Use a smartphone app like MileIQ that tracks your drives automatically. For an LLC owner, a retirement plan is one of the most powerful tax reduction tools in the entire IRS code. It's a brilliant strategy that benefits you today while securing your financial future, primarily through what's known as a triple tax advantage. First, your contributions are immediately tax deductible, directly lowering your business's taxable income for the current year. Second, all your investments within the plan grow completely tax deferred, allowing your money to compound dramatically faster. And third, with modern options like a Roth 401k, your qualified withdrawals in retirement can be 100% tax-free. For most LLC owners without employees, other than a spouse, the undisputed champion of these plans is the solo 401k. It allows for significantly higher contribution limits and more flexibility, like plan loans, than other common options. Let's use a real-world example. Say your LLC netted $100,000 in profit. With a solo 401k, you uniquely contribute in two capacities, as the employee and as the employer. As the employee, you can contribute up to the annual maximum. Then, as the employer, you can contribute a substantial percentage of your profit on top of that. Combined, this dual contribution power could allow you to shelter over $50,000 from taxes, instantly wiping that entire amount from your taxable income. This single move could save you $15,000 or more in your actual tax bill. But timing is absolutely critical. You must establish your solo 401k plan by December 31st of the tax year. This is a hard deadline. The plan documents must be signed. However, here's the crucial tip many people miss. You don't have to fund the plan by that date. You actually have until your tax filing deadline the following year, including extensions, to make your contributions. This gives you the flexibility to finalize your books and decide on the exact amount, but don't wait until the last minute to get the plan in place. You can hire your own children to work in your LLC and pay them a tax-free wage, creating a massive tax deduction. Pay your child up to the standard deduction amount, and they will owe zero federal income tax. The money has successfully moved from your high tax pocket to their no tax pocket. The QBI deduction allows you to deduct up to 20% of your qualified business income right off your taxable income. If your LLC generates $100,000 in net profit, you may be eligible for a $20,000 deduction. There are income thresholds where the deduction begins to phase out, making year-end planning critically important. Every single dollar of your net profit is hit with a 15.3% tax for Social Security and Medicare. By filing Form 2553, you can ask for your LLC to be taxed as an S-Corp. Your total tax savings on this one move? A staggering $12,240 year after year. The Health Savings Account offers a triple tax advantage that no other retirement account can claim. Tax-deductible contributions, tax-free growth, and tax-free withdrawals for medical expenses. Your LLC can pay this amount directly into your HSA, creating an immediate business deduction. Knowledge without action is useless. It's one thing to learn but another to implement. You must be proactive. This isn't just about saving money, it's about shifting from reactive problem solving to strategic wealth creation. Let's turn knowledge into results. Don't wait. The clock for 2025 is already ticking. Many powerful strategies have early deadlines or require consistent action all year. Waiting until December is too late. The decisions you make today directly impact the money you keep 12 months from now. First, on your action plan, set up separate finances. Open a dedicated business bank account and credit card. This is non-negotiable for protecting your personal assets and makes identifying deductions a breeze. Next, document your key deductions. Analyze your home office using the actual expense method for a bigger write-off, and track every business mile. Use a dedicated app. At over 60 cents a mile, this adds up to thousands in savings. Then, supercharge your savings and structure. Open a retirement plan like a SEP IRA or a solo 401k. It's a double win, a massive tax deduction now while you build your nest egg. As profits grow, evaluate the S-Corp election. It's a powerful way to save thousands on self-employment taxes by paying yourself a reasonable salary and taking the rest as distributions, which aren't subject to those hefty FICA taxes. Get creative with other legal strategies. Consider hiring your children for legitimate work. Their wages become a deductible expense for you. If you have a high-deductible health plan, open a health savings account or HSA to pay for medical costs with powerful pre-tax dollars. Finally, and most importantly, schedule that tax planning meeting with a professional now, not later. A proactive meeting lets you map out your entire year and implement these tactics correctly. This is your roadmap. This is your year to finally get ahead of the tax game, stop reacting and start commanding your financial